Morning, hello. Thank you very much, everyone, for coming in today. Thank everyone that's here. It's good to see a few familiar faces from our last event in Parramatta. And it's good to see a few familiar faces that were with us from day one. Right, so very special welcome. We actually do have guests that flew in from interstate. Before we start, just a quick recap of the transformation that's happened at Skaffold since our last event in Parramatta. We have gone, you might have seen, we now call Skaffold, new Skaffold Digital. You are no longer tied down to your computer, log into Skaffold. You can now log into Skaffold using your Android tablet or phone, using your iPad. You can log in from anywhere, be it on the train, while you're driving. As long as Tesla will allow you to connect, you can actually look into your portfolios. The other thing that you did that you members asked for and we delivered, you can actually now print from Skaffold. So you can print absolutely any screen that you're looking at, the evaluation screens, the table screens. Now don't worry about the ink. We've devised a way where Skaffold is friendly on your printing pocket, so it won't take up too much color out of your cartridges as well. And when you do renew, there is a nice little surprise for you. So when you do renew, you will have access to the international markets. But it's pretty exciting. If you're not invested globally, it's still pretty exciting to be able to log in there, see what's happening internationally, see how the other markets are doing. And we are proud to be the first research company, stock research company in Australia to actually offer global markets as well. And we're even more excited to be able to offer it to all our members. So since 2012, our friends from Money Magazine have tasked us to actually come up with a portfolio of top 5 stocks every year. And we're very happy that since we started, if you had bought into the top 5 stocks in 2012, sold them and rebalanced each year and bought into the new top 5 stocks, we've actually performed and had returns of 74% to date. So that's an average of 23% per year, and that's not too shabby. So what we'll get today, we'll get our General Manager, Chris Batchelor, just to come up on stage, just quickly talk us through how we went about finding the top 5 stocks, especially for 2015, and the process that we follow and why it's so important to have that approach. Now, straight after Chris is our main speaker for today. It's all about trying to get into Roger's head, you know. What is it about some businesses that are, that makes him take a notice? What process does he follow? We've heard Roger talk about REA Group. What is it about REA Group, for example, that gives us an unstoppable advantage? And, some people have rang us on the phone and said, does he have a sixth sense? Hey, maybe. Today's the day we find out. So, even the master himself sometimes gets it wrong now and again. So it's all about, having that process, sticking to it, and being able to get ahead of the returns. So, look, without further ado, we'll get our first speaker, a qualified chartered financial analyst. He has 20 years of industry experience. You may not know this, but as one of Skaffold's founding members, Chris actually devised quite a few of the algorithms that Skaffold uses to come up with the evaluations that we came up with. He's a successful investor in his own right. About 3 years ago, he set up his self-managed super fund, and he's actually doing about more than 100% in returns. So he's doing fairly well. So we're actually very lucky to have him up here and just lead Skaffold and give us today's presentation. So ladies and gentlemen, Chris Batchelor.
Thank you, Shepard, and thank you everyone for coming along this morning. We really appreciate you taking the time to be with us here today. So as Shepard has just mentioned, Money Magazine have asked us to develop these portfolios for their readers, and we've done that now for the last 3 years. So we did pretty well in our first year, but we didn't really want to brag too much about that because, hey, it could be a fluke. But after 3 years, you're starting to feel like, maybe that's a decent track record. So, 20% over 3 years. I thought I'd just talk a bit about how we went about that. And the important thing to understand here is that it's really about having a disciplined process and then applying that rigorously. Skaffold, as you know, is a research tool and it's quantitatively based. We are applying a process here. We're not taking our own opinions. It's not my opinion. It's not Roger's. We are going through a strict process whittling down a list of stocks and coming up with a portfolio. Now, I'll talk to you today quickly about how we've done that. So we started back in 2012 with a hypothetical $50,000, and we put that into 5 stocks, and these are the stocks that we chose. Now, normally, of course, we would recommend a portfolio of more like 15 to 20 stocks, but Money Magazine requested us just to keep it tight at 5, so this is what we've done. Now, some of those stocks, Codan did 80% that year, ARB did 49%, M2 Telecoms did 49%. Seymour White and ThinkSmart did about minus 40 odd. Overall, at 18%, which was not too shabby, but of course, not everyone was a winner. Fast track to the beginning of 2013, we took all the proceeds from that portfolio, plus the dividends, and we invested them in these 5 stocks. Flight Centre did 70%. That was a real winner. Cedar Woods was 64%. Clough was 60%. Decmore was flat, and Mastermind halved. Again, beginning of 2014, we rebalanced the portfolio, and this time we decided to go international. As you know, we're an international stock research provider, so we wanted to put that on the table. So we chose Microsoft, which returned 43% that year. What If, an Australian company, did 24%, thanks nicely to a takeover from Expedia. WestJet, a Canadian company, a Canadian airline company, did 21%. Great Wall Motors, the Chinese company listed in Hong Kong, did 15%, and Ashmore was our one fave for that year at minus 25%. I guess important to note here, our timing was excellent in terms of going international. That's the year that the Aussie dollar decided to start depreciating, and so we got a nice little kicker from that as well. You've noticed that each portfolio did have some stocks that performed poorly, but they were well and truly outweighed by the ones that did well. Just a couple of qualifiers on this chart here. This includes the first 6 weeks of 2015's portfolio, which I'll get to in a minute. That's already up 7% in those 6 weeks, so that's helping that along there. Also, it only includes for the 2014 year What If, because the other stocks, of course, are on other markets. So it's not exactly reflective of the numbers that I was telling you. So the long and the short of that is that $50,000 invested at the start of 2012 would be worth about $94,000 today. Okay, so what's this process that we use, and how did we get to these top 5 for 2015? Well, first of all, Money Magazine asked us to go back to the ASX because that's where their audience they thought was more at. So, okay, we did that. And then from there, it's just a process of elimination. So we start off, we don't like stocks with a high level of debt, so we immediately eliminate those. We don't like stocks with a lousy cash flow, in particular stocks that have a long-term funding deficit. We knock those out. All of this is done using the filter tools in Skaffold, which I'll show you shortly. We don't like stocks that aren't making any money, so stocks that have a zero valuation in Skaffold immediately get knocked out. We do like stocks that are A1, A2, B1, B2. They're the ones we're focusing our energies on. And a few other filters that we added. We looked for a positive return on equity. We looked for stocks that have analyst coverage. We looked for forecast change in value of greater than 2%, just to make sure we're keeping up with inflation there. A positive one-year EPS growth, and trading at a discount or a small premium. Overall, each of those characteristics is fairly broad, but when you put them together, you end up with quite a tight universe of stocks. I'm going to now just flick into Skaffold itself and show you the portfolio that we set up for Money Magazine. We've entered this into Skaffold, as you would expect, and that's how it looks right now, as at today. So the 5 stocks that came out of that process when we did it right at the start of the year, 2nd of January, was ANZ, Flight Centre, REA Group, Breville and Nick Scali. So all probably names that you're quite familiar with. Now what I want to do here is show you this feature which some of you may not have seen. It only was released a few weeks ago actually, and this is our compare or look at stocks side by side. So what I've done there, clicking on that little button, has brought up those 5 stocks, but in a view where you can see them next to each other. So you can see, as you might well expect, that the summary points for these particular stocks, there's a lot of green, very little red. Obviously that's why we chose them, part of the reason. We can then flick across to the verdict, and you can see side by side how these stocks measure up. So they're all either an A2 or an A1 stock. All have respectable historical change in value and respectable forecast change in value. There's a bit of a mixture in terms of safety margin, and of course remember that what you're looking at is as at today, not what it was at the 2nd of January when we set this up. You can go through all of these tabs and see where we're up to, in terms of earnings. It's basically the same as the evaluate pages, but lining all the stocks that you're interested in up against each other. And of course, I've chosen this portfolio, but you can put in any stocks you want into this particular screen. Dividends, capital history is always interesting to see how they measure up. Of course, as you might expect, very little or no debt in the companies that we've chosen, good return on equity, and lots of equity. Cash flow, likewise, you'll see nice positive numbers there, the green lines remaining high. Cash flow is not applicable for the banks, of course. Value versus price, that's your price chart, compare it to the valuation line. And the one I really wanted to emphasise today is this forecast updates page. I'm not sure if everyone's familiar with this page, but what this page shows you is the valuation compared to the price. And what we all know, hopefully you all know, is that values change. Right? These are forecast valuations, so if something changes about the expectations for the future of a business, then the forecast valuation for that business will change. If there's an announcement about earnings, there's a downgrade or any number of factors, the analysts can change their expectations and that will feed through to the forecast valuation. This screen enables you to track that. So you can see for Flight Centre that its valuation has indeed fallen over the course of the year. And what I'll do, I'll just click on this little icon here, which takes me into the evaluate pages for Flight Centre. And I'll just highlight something to you, which I thought was quite interesting. If we go back here to early March of last year, Flight Centre was at $55.57, and the forecast value for 2015 was $50. So it was trading at a premium. Fast track to the 2nd of January when we did our analysis for the Money article, and you can see that the value has indeed fallen. It's down to $41.64, but the market price has fallen significantly more, and it's down to $32.84. And so what that's telling you there is it's gone from a premium to a discount in terms of its valuation or safety margin, but the price fall has outstripped the fall in valuation, and that to us said maybe there's an opportunity here. Maybe the market has overreacted, and sure, there are some possible headwinds that Flight Centre is facing with the depreciation of the dollar and so forth, but maybe the market's gone a little too far, and maybe this represents an opportunity. And this screen is a really powerful screen for helping you to analyse those trends over a period of time.